Wes, good to see you. Today we are talking long-term care insurance and three things you should consider before you buy a policy. More than 70% of adults who live to the age of 65 will need long-term care. Not only is it very expensive, but also it's not covered by Medicare nor other health insurance plans. So let's just start with the easy question. Who even needs long-term care insurance?
Well, when we think about any type of insurance, Aaron, we're looking to cover something that we can't afford to replace ourselves,
Right.
right? And so for most people, the future long-term care cost that is likely, unfortunately, it's a cost that they don't want to self-insure or private pay. So it is smart to look at what kind of policy, because there's various types, there's different alternatives that one could use, but it doesn't make sense to have some sort of coverage so your assets aren't bled down due to this type of cost.
Right. There's so much to consider. So now let's walk through a few of the most important considerations. The one that I hear most often is, what is the right age to buy a policy?
It's kind of a tricky thing, but you could, as early as say age 40, begin to look at this. But for most people, that's really too young. When you get into your mid 50s to early 60s, that's the time to really take a serious consideration as far as what kind of cost that you could be looking at, what kind of coverage makes sense for you. And if you wait too long, say beyond age 65, and you had developed some sort of health issue, well, then maybe it's too late, right? And you're not able to get the
Right.
coverage that you could have once had. But it really comes down to what you can afford and tie it in with your plan, because again, there's so many different kinds of options and costs that we should be thinking about.
Right. So you did mention coverage. So let's chat a little bit about coverage. I want to show you this, which I thought was very interesting, Wes. A look at cost of care by state. We've pulled up Raleigh here, of course. So this can range from monthly median costs right now. And as you mentioned, the cost is only going to increase from about $5,000 a month to $8,000 a month. So how do you determine what kind of coverage to buy?
It really depends on what kind of care that you desire. So it's a known fact that about 6 out of 10 Americans don't really have a desire to spend their final years in a nursing home,
Mhm.
understandably. But for those that want something more like a in-home care or assisted living center care, those come with different costs and various options. Whether you want a private room or something that's semi-private, it really just depends. But again, it starts with a conversation. And sometimes, again, Aaron, this involves family members getting together to talk about what kind of role that each other is going to play in your later years, whether they're going to be a caregiver at all or none. That really just depends on your situation. So depends on what kind of care you want. And that kind of dictates the type of policy or coverage that would be beneficial to you.
Right. You bring up so many good points with that. Such an emotional decision, too, especially when it involves your family. I can understand why people put it off, but it's such an important conversation to have. The next thing I wanted to chat about, Wes, were other options. So instead of long-term care insurance, is there anything else that you would recommend?
Well, we're not talking about something that would purely replace a long-term care policy, but there are some pretty neat tools that, when used correctly, they can help supplement these costs. So we think of one would be like a specially designed life insurance policy that usually has some cash value buildup, but then has a rider that could help pay for things like a chronic illness, critical illness, or you could have an acceleration of the death benefit for some sort of long-term care costs. But again, it's not replacing that, but it's
Mhm.
used to supplement those costs. Another would be a hybrid annuity, which is a deferred annuity that has a rider that's designed to help pay for long-term care costs. If you don't use that rider, then, and if you just pass away, maybe you live a nice long life, or if you just die soon, your beneficiaries can still benefit from a death benefit of the annuity passing on. So that way, that your money, it always gets used, whether it's for care or it's passed on to your beneficiaries.
Right. Okay. Wes, thank you so much for talking this through with me. Obviously, again, I think this warrants a conversation. So if somebody wants to ask you any questions, what's the best way to reach you?
Give us a call at 919-322-4113 or shoot us an email, info@patriotwealthnc.com.
All right. Wes, thanks so much.
Thank you.